Good afternoon. This is Alan Heffling from Comstock Investments in Royal, Iowa. I'm going to present you a webinar this afternoon, giving you the results of the supply and demand report from the USDA this morning, and actually kind of talk about markets a little bit. And I got a couple surprise slides at the end. Let's see here. We'll go to screen share here. Okay, once again, my name is Alan Heffling. Go here. And what I'm going to show you here is a USDA ending stocks for United States. There really wasn't any big surprises here today. I think the trader was looking for a little bigger carryover in corn because of the March 31st stocks report. But on a later slide, I'll show you why they didn't increase the stocks in corn. Soybeans, I think the trade was looking for bigger supply as soybeans at the end of this marketing year, and sure enough, the trade of the USDA came out with that. The wheat, I was a little surprised they went as big as they did, but we knew we had a big crop out there in the wheat carryover, and it just going to have a little bigger carryover now than I would like to have seen. Next slide. Is just a straight slide of the soybean supply and demand table. The numbers in green and red are the changes that they did. Residual on the bean side, they decreased that, so that gave us more beans. They actually gave us, and then they took, obviously with more bean acres, they need more seed acres or seed, so they're going to use a little bit more seed for beans for seed. So that you do the math there, and then it comes out to 10 million more bushels of beans. Not a big surprise to the market. Corn revision, nothing really changes there except the feed and residual. They lowered it by 50 million bushels, but then they brought it back with the food and seed. And that comes out to a net zero value. So that's where we stayed the same on the ending supply. So that did catch the trade a little bit by surprise. So that, corn didn't sell off too bad initially, but I'll go into some further slides and do it and explain that. All right, wheat. Once again, look at the red numbers. Imports, they dropped 5 million bushels. That gave us less supply that we deal with. Feed and residual, they took some away from that. You do the math there, and it comes in 30 million bushels more wheat. All right, and this is a slide here that gives you the world grain and oilseed stocks. And this is the numbers that I thought moved the market today. You can look at the world wheat carryover. It grew by a few million metric ton. I think some trader was thinking that it was going to be the same, but it was actually a little bigger than the trade thought. Corn, big number in corn. All I can say is if you look over here in last April where they were at, you can just see that South America had a terrible corn and soybean crop coming at them. And that's why the price did what it did last summer. So, but this year they got a complete opposite going on down there. They got good corn and soybean crops coming at them. And you can see that it's reflected in the world carryover stocks. And that is what really gave the market a negative tone this morning. But as you all know, by the end of the day, the corn and beans didn't have too bad of a close. So South American production, we break that down now, just big numbers. So all I can say there, I was surprised USDA actually went to the high side of the ranges on this, but they did, so the market is aware of that. There is a little bit of chatter coming out of Argentina that it might be too wet, but I have not seen any estimates of crop losses or anything like that. Actually, some of the rain is helping the second corn crop. So I'm going to go into my charts now. This is a soybean May daily soybean chart. You can see where my cursor is down here in the corner. You can see the last 7 days, 8 days, we've been trading sideways. We're just waiting for another news flash or something that would break it through support or through resistance. Well, with the world numbers or where they were at, the market actually broke through this support before we even had the numbers. And then once the numbers came out, we continued down for a while, but we ran out of sellers later in the day. So I wouldn't call this a turn day. I just think that the market has sold off. The month of March, it sold off. First 10 days of April, we've basically been going sideways. I don't see a trend changing thing here at all. I think we're going to trade sideways until we get this new crop planted and up out of the ground, find out how many acres is actually planted. And we still have the South American crop to do what it is projected to do. So that the market is to me, has gone far enough for now. And we'll just see how it trades here later on. This is a monthly continuation soybean chart. I just want to point something out. This red line is to me really solid support. If you go back, years back, you can just see this $9 area is solid support. We broke through it a year ago last fall, and we traded there for 6 months. But if you remember, about April 1st of last year is when we started having problems in South America. And obviously they did have problems. They had a short crop, the market took off, and we rallied for 3 months. And now we got our big crop here in the United States harvested. It's in the bin, it's been sold, but we're projected at a 445 million bushel carryover. So we're dealing with that, and that's why the market is doing what it's doing. So like I said before on the daily May chart, I think we got solid support down here at $9.10, $9.15. It's going to pause here for a while and wait for the next news. We may be lifting some of our hedges if we get down to this 9.15 area. So just stay tuned to our recos. But it's something that we're going to keep an eye on. The next chart is the December corn chart. All I can say on this chart, the market is nervous. You can see some big days here. On the 31st, the March 31st, this was the day the planting intentions came out. The market, the report verified that we lost 4 million acres from a year ago, or plan on losing 4 million acres from a year ago. We had a 2-day rally, basically a 20-cent move up, ran out of buyers on a week ago Monday. We ran out of buyers, and we sold it off basically all last week. Then we had a good day yesterday, back above some of the moving averages that I follow. And then today we actually took out yesterday's high, try to break yesterday's low, but they didn't quite do it. So basically we made a higher high and a higher low today. Very constructive on the charts, but I think we're going to run into some heavy resistance on the May chart, on the December chart. Excuse me, this is the December chart. We're going to run into some heavy resistance around this 395 area, but I cannot rule out a charge at this high that we put in back in March. This 404 high, I think it was that high that we put in. I don't know if we have to have a weather problem to get there either. I'm somewhat really friendly the new crop corn, but it's got some hurdles that it needs to go through, but I don't think we're going to sell off too bad either. Once again, we got to get the crop planted. Who knows how many acres are going to end up getting planted, but the market's going to give us an opportunity here probably to to sell some corn here down the road at higher prices. My next chart is a daily continuation chart. As you can see, we're getting into ourselves into a wedge pattern. These two trend lines here. And again, my red line to me is solid support down below the market. We put a low in March of 353. The March contract did that. And then our yearly low so far was put in the first or second day of trading for the year, and that was at 352. So I see good solid support on the continuation chart at 352. Now on the upper side of it, as you can see, our high here a week or so ago was right around 370. That was the May chart that put that high in there. We still have, I'm guessing until about mid-May before May falls off, and then July will come in and fill its spot here on the continuation chart. I don't see July. I think it's going to be difficult for July to break these two highs up here. It looks like right around 380. And right now, July is not that far away from 380. But as we continue to go into the marketing year, we got to move this old crop to the channels. And I think the only way that we're going to get above 380 is if we have some type of a hiccup someplace, either late plantings here in the U.S. or a devastating flood in South America. Something's going to have to happen for me to get this continuation chart much above 380. We might poke our head above it, but I wouldn't lose a lot of sleep over thinking that we can do that. I still believe that you get 350 cash corn offered to you. I think that's a pretty good price, because basis will start to play havoc again. I know the basis is wide enough the way it is now, but we got a lot of corn to move unless you guys are thinking of storing it for another year. And I know some of that's going to happen, but still, I just don't see old crop corn given it much of an opportunity to go much above 380, 390 area. All right, here's a wheat chart. This is a daily December wheat. Those that follow us on our trade page, our Reco. Let's see, I gotta go back. Okay, this is the wheat chart. If you go back on that trade page, we made a recommendation to buy December wheat at 468. Well, I pulled it. I didn't like the way the charts went up to my moving averages and failed, and I pulled it. It looks like it would have been the right thing to do, but we'll have another opportunity to buy December wheat. I still am friendly new crop wheat. I just think the fundamentals are there to push this wheat market higher on new crop. But just like corn, I'm friendly new crop corn for a while here, just like I am friendly new crop wheat. But I just see that we got to work through some old crop supply first before we can really take off. But I will keep you in tune about possibly buying this wheat. But the charts look really constructive tonight on the close. Okay, this is one of a surprise chart. I always like to add something in the chart here. This is a cattle chart, a monthly cattle continuation chart. April cattle is lead month now. As you can see, today we took out our March high. I think our March high was 122 and change. Today our high was 123 and change. I like the way the charts have been performing since we put the bottom on. You can see this monthly downtrend line. I don't know if we can clear that for sure, but I still have my hopes that we can take April cattle to 126 to 127 area. And I can't rule that out until the charts tell me differently. But I still like the cattle charts, and I think it's a good possibility that we can do that. So For you guys that are open in the cattle yet, not hedged, I would probably just stay at the market right now. As long as cash is where it's at, I think we're fine. I also, the deferred contracts, they're coming up also. If you start to see some sizable profits that you'd like to lock in, the puts aren't that bad of a place to be. You can buy some 108 October puts for $4 today, you know, and then eventually I would sell some calls against them like that. But the cattle charts to me look constructive. I think there's a ways to go yet. Feeder cattle, I don't have a feeder cattle chart, but I like the feeder cattle. I think lead month can hit 144 area. I don't know if it's going to be the April. I kind of doubt it if April will do it, but May might have a shot to get to 144. So stay tuned on that for more information. All right, this is a gold chart. Don't have a lot of people that trade gold, but we do track it. We do have some people that trade it. We're in a long downtrending market right now. I would still consider it a bear market. I would love to take out last year's high, which is just under 1390. You can see where my cursor is here. But we are at a 4-month high. And with last week's movement in gold, it's brought that chart back to life. So I'm kind of friendly to the gold chart right now. We're going to hit some resistance here around this $1,300 level. But boy, if we can clear that, we might be able to take out last year's high. So I'd be buying gold on breaks and see if we can take a little money out of the market that way. Well, that kind of wraps up my webinar. You can see telephone number there, how you can get a hold of myself or any other brokers here. We have a lot more information that we share. We're always looking for producers that need some help with marketing. And also we invite speculators. We got some nice speculative trades put on so far this year. So if you're interested in talking with one of us or myself, once again, my name is Alan. You can contact us at this number here. So I really appreciate the time that you've taken to look at this webinar. I just enjoy what I do, and I enjoy talking to individuals all across the country. So don't be afraid to give us a call here at Comstock. So until next time, I'm signing off. Thank you.